Okay, here we are for the opening session of 2012 for Shemwell on Business. And we're going to talk today, because I teach retailing here, we'll talk about some news that occurred over the holiday break. The holiday break that for us academic people extended until the beginning of this week for us. Sears Holding Company, which is the holding company, is now really a merger between Sears and Kmart. I think they merged in 2005. Announced that they're closing 120 stores. Now, between Sears and Kmart, I think they have almost 3,000 stores, and it's one of the one of the largest retailers in the United States. So 120 stores is not that big a deal. But then a few days after they announced that, one of the suppliers said that they were going to stop doing supplier loans. And retailers really rely on supplier loans, supplier financing for their inventory. And so the fact that one of their key suppliers is going to yank credit or tighten credit on them raises the probability that we may see a bankruptcy for Sears, the Sears Kmart operation, sometime this year or next year. I don't think it's that much of a danger factor. Sears has a healthy balance sheet. Which the problem that the Sears Kmart operation have had is that they've been hemorrhaging money, and that their returns from operations are very low, and not necessarily that their balance sheet is weak. In fact, the company, even if the company goes into bankruptcy, they may actually be worth more that way than as a non-operating entity than as an operating entity. And the reason for that is that they have a lot of assets in land, long-term leases and land, a few instances where they actually own property that is carried on the books at a much lower cost than the current market cost would be. And Sears, I can remember in my hometown, they had a 99-year lease on a piece of property. They got a 99-year lease, and then they have the right to sublet that, so they could actually liquidate. It's possible that they may liquidate, but the company may be worth more dead than alive. Now, of course, for the many thousands of employees, the 300,000 employees of Sears and Kmart, that would be a disaster if they liquidated, because they would all lose their jobs. And I don't really expect that there's a high probability. I would put it at probably less than 10% chance that they are going to go bankrupt in the next year, and maybe a little bit more than that on down the road. And even if in some instances, particularly a retail company, if they go into bankruptcy and restructure, there are certain advantages to that. For one thing, you can get out of leases much easier. When you go into bankruptcy, you have some leverage. A big company like Sears or Kmart would have some leverage that would allow them to get out of the bankruptcy, get out of leases in situations, not get out of the bankruptcy, get out of leases in situations where they're paying more than they want to, or the cost of the store is they're actually losing money or have negative cash flow, and then the cost to get out of that lease might be very expensive. And this would apply primarily to new properties. Many of the older properties that they hold, they are actually can be rented at the current market rates to a new, better format of retail store. Can be that in the mood to expand, that it can be rented out, subleased to them, and could make more. They could make more money from that than they could from keeping the store in operation. Now, I've talked about Kmart quite a bit in my lectures or podcasts that are on iTunes for some of my classes. And in particular, the thing about the Kmart strategy that you have to understand is, first of all, the company is owned by Edward Lampere. And although around here in Tennessee we would call him Lampert. But he's a hedge fund operator. He bought Sears about 8 years ago, I think, and then he obtained Kmart and merged the two together in 2005. And he has made money, and he's made a good return on his investment, even at current prices. And now this is after the shares of the Sears Kmart, Sears Holding Company, Sears Kmart operation. You can look it up on the internet if while you're listening. SHLD is their call symbol. But they're even now, after the stock has dropped 60% over the last year, and there was another drop yesterday. Another drop yesterday when almost 5% when the news about CIT Holding, one of the company that's a factor for them and provides a lot of their supplies, announced that they were going to tighten credit on them. Even though CIT is a big company, I don't think many other creditors are going to follow. They went into bankruptcy themselves in 2009. And so they're when you go into bankruptcy yourself, you have a tendency to want to keep anybody that owes you money on a short string. And I think that they're, so I'm not expecting other suppliers to follow suit. Now, if other suppliers follow suit, they may have no choice but to declare bankruptcy or to go into some sort of restructuring liquidation type of procedure, if that's the case. But it's almost like one of the people that supports you in business is like voting against you and saying, I don't like your chances to survive. I think they only represent about 5% of the total inventory, so it's not, even though it's, I think the article by Coleman Lochner on Bloomberg said that it was a major supplier. I think that they actually only supply about 5%, and I did notice that the aftermarket, even though Sears fell 5% yesterday, in the aftermarket they jumped back up once I think Sears was able to respond and explain what was going on, and people started taking a closer look at it. The stock went back up again. So when you have a hedge fund manager running things, hedge fund managers like things lean and mean. In fact, that's what most hedge fund operations do. They come in, they buy something, they lay off, especially middle management, upper management. They cut layers of cost, and they try to make the business run more efficiently and more effectively. And in fact, if you go into a Kmart, and this is the thing that I've talked about with my students, and of course all the students here have been into the Kmart either here in Johnson City or one of the Kmarts in the other cities. You go into Kmart and you look over across it. In our area, both of the Kmart and Walmart are on two big, huge plateaus. They're right across the freeway from each other, and you can almost see, if you get in the right spot in the parking lots, well, you can see across the parking lot and look at the Walmart from the Kmart and the Kmart from the Walmart. And if you do that, you get in that right spot at Kmart, you look at the Kmart parking lot, and it's empty. There may be 20 cars parked there, 10 of them may be employees. If the stock people aren't working, in the middle of the afternoon or something like that, there may just be a few cars there. You look over at the Walmart parking lot, and it's absolutely crammed full of cars. And there's more cars coming and going at almost any time at the Walmart than there are sitting there parked at the Kmart. So not just counting the parked cars. There's so much more business at Walmart yet. And this is the thing I've emphasized to my students. When you go into Kmart, because I used to live right across like 2 minutes away and it was convenient to stop in there, more convenient to stop in there than it was to go to the Walmart. Why is it if they have 10 times as many customers in the Walmart or 20 times as many customers in the Walmart as they do in the Kmart, why is it that you have to wait longer in line at the Kmart? And one of the things that they do is that they have the lowest cost structure in the retail industry. The Kmart spends about $2 per square foot to maintain the Kmart Sears operation. Spends about $2 per square foot to maintain the operation. And they spend a lot more on Sears than they do on Kmart. So Kmart must be way, way, way down there. And I think about the store and how many square feet because this is it's ETSU, we don't use square feet, we use square meters. But you look at a Kmart store that's 180,000 square feet, about 19,000 square meters, and you look at a store like that and you see that they've got 10 or 15 employees working. That's a lot of square meterage or square footage for a store, per employee for a store. Now, of course, that for somebody who's bottom line oriented but not top line oriented, and that's the way most hedge fund operators are. They like the idea that they're lean and mean. But for when customers go in there and the store is empty and it still takes forever to check out, because no matter how, even at 6:30 at night, the prime time for people to stop in and shop to pick something up for dinner or something like that right after work, even at 6:30 at night, they may only have 2 registers open. And at Walmart, if there's a big line or big lines form, Walmart is very good about opening more registers. I mean, if lines form, they open more registers. And I remember this is about 5 or 6 years ago, and it's I want to say about 5 years ago. I was in Kmart, and they had a big rush of people, like 10 people want to check out, and they only got 2 registers open. So there's 10 of us lined up 5 deep at 2 registers. And this is an experience. If those of y'all had this experience, please send us an email and let us know what your experience was in that situation. But anyway, they were lined up, and then somebody that has a manager tag comes on, and I said, "What is the rule on this here?" And he said, "What is the rule on what? What the rule on what?" I said, "The rule on if you have a certain number of people, you got to open more registers. How long does this line have to be before you open more registers?" And he said, "Well," he says, I don't know. I don't really have anybody else that's working at it." And I said, Walmart's got like 10 times as many customers as you, but it takes, longer to check out here than it does over there. I said, you're the manager here. There's one thing that you can do better than Walmart. You can't fix the inventory system. And the inventory system, and you go in Kmart and they've got lures for saltwater fishing. This is one example. Saltwater fishing lures in a store that's 800 kilometers from the ocean. 700 kilometers, I'm exaggerating, 700 kilometers from the ocean. And you can't fix that, and many of the other problems maybe you can't fix. But the one thing you can do as managers, make sure that people check out quickly. It's be very easy for you to do one thing better than Walmart, and that's get people to check out quickly. And then if you got people to check out quickly, you might have more business. So the guy acted like, that was not his job, to make sure that, people could check out quickly or anything. That was not his job. He did not see himself in the customer service business. And honestly, if you're in retailing, and I know some retailers may manufacture a few things, but you're not in the business of making things. You're in the instance of providing a service. You break bulk. If you have your own wholesaling operation, you may break bulk from the shipping container unit down to the case unit, and then that entity ships it out. The retail store itself breaks bulk from the case unit down to the individual unit. You provide a clean, well-lit, comfortable, convenient place for the final consumer to come in and purchase that product. You have systems that make it easy for them to pay. You take their debit card, their credit cards, make it easy for them to pay. You've got shopping carts. You've got a big, huge parking lot, which is a major expense, major fixed expense, so that they can park close in a society where, people will, which is another story for another time, people will fight over a parking space when they could drive another 15 or 20 feet and get get that park space. People are, a lot of American people we're notorious for being overweight. I'm overweight myself. We don't exercise enough, and we don't like to walk very far, and we like to park up close to the as close as we can to the store, to the area where we got to be. So provide a big parking lot. and all of these different types of services that they provide. That's the business that you're in if you're in retailing. You have some back end stuff like the buyer serves as the purchasing agent for the public. In other words, if they buy the right things, the things that the public wants. And I've talked about the plaid year. The year where all the experts said everybody's going to be wearing plaid, and the stores filled up one fall. All the big stores use the same experts, the same forecasters, and so the stores are full of plaid. But the public doesn't necessarily have to wear plaid just because the buyers think they should. And so the just like the fishing lure buyer at fishing tackle buyer at Kmart ought to realize that we're 800 kilometers from the ocean and have only tackle, or 99% of the tackle should be stuff that's used for bass and crappie and maybe bluegill fishing, trout fishermen, trout also up here, a lot of rainbow trout up here. So you ought to have lures for that kind of thing and not lures for fishing, offshore or deep sea fishing or things like that. So the buyer, there's certain back end things, but even that is a service. So in all this, you're in service. If Kmart is looking at, Walmart is building their stores right next to you. And that's one of the things that Sam Walton did. He said, there's a Kmart, I'm going to build something right next to it. And I'm going to do everything better than them. And if you're a Kmart and you're a manager of Kmart and you look over at that Walmart, because one thing you could do better than them easily, right away today, and that is check people out quicker. That one thing. And then you tell your managers the main thing, the people that train the managers and are the ones that give the managers their procedures, say the main thing is that you check people out quickly. A well-managed grocery store in Florida, where I grew up, Public Supermarkets, their manager's office in every one of their stores is located so that they see what's going on at the checkout lane. Their main focus, while they're doing all the other things that managers do, they're also able to look out, sometimes through a two-way mirror, look out and see exactly what's going on in the checkout lanes. I don't think the Walmart managers, I wonder where the Walmart manager's office is versus the Kmart manager's office. And that would be an interesting thing to determine. And if some of y'all may go to some of y'all that are watching this, you want to go to your Kmart and Walmart stores in your area and ask where the manager's office is, send me an email and tell me whether this is right or not. But I don't think the Kmart manager really pays that much attention to what's going on in the front. And they don't have enough people there to have like a head cashier or a head service personnel coordinator. Walmart can, because they've got so many workers, but they can have somebody that just coordinates the front. But at Kmart, when you've only got 2 registers open, you don't need another person to coordinate those 2 registers. That's 12 hours out of the day, 14 hours of the day, they've got 2 or 3 registers open. And this is a big Kmart, a full-scale Kmart that has food, used to have food. I'm coming to that in a second. Used to have food. So they can't. There's that one thing. If I was, somebody asked me what should Kmart do, I'd say right now I just make a commitment to check people out quickly. Do one thing: check people out quickly. And maybe some of the people that have to drive by Kmart to go to Walmart, and they only need a few things. And people used to go many years ago. Used to go to the store and they would have they would write a list and write things down, and they would buy enough food for the whole week, maybe 2 weeks, and they would take all that home and they would put it in the freezer and refrigerator, and they would have menu cards and they'd have everything planned out. People's lives are not planned out that way anymore. We don't plan everything. I wonder how many of y'all that are watching this. And you can ask maybe around your office, your coworkers, something. How many of y'all know what you're going to eat tonight? I'm not sure what my wife and I are going to eat tonight. Now, then some days we do know. We set something out. Last night we had sangsang chige, which is fish soup, and we had to thaw the fish out that I had caught on vacation. Had to thaw it out, and I had cleaned it a certain way to make it good for cooking in a soup, and And so I knew yesterday I could have told you, but today I couldn't. And what am I going to have tomorrow? I don't have a clue, no clue whatsoever as to what we're going to have tomorrow. And many people shop for a few days. So they're picking up just a few things, maybe, $30, $40 worth of stuff. And so being able to check them out quickly, I think that might be the key to, that might be the key to the turnaround. If you really want to turn it around, I'd say I'd start with one thing, check people out quickly. And that's particularly true for the Kmart. Now, the Kmart where we're at had so few customers that I'm pretty sure this is why that happened, or I'm speculating this is why that happened. I have no inside information. But they closed their food section off. So you have a 19,000 square meter Kmart, and they closed their food section out, and they do not sell food anymore. And the last time I looked, as this was being done, they're not doing anything with it. I mean, if they were releasing it out or they were going to make some money, that square footage is just sitting there, and it's not even, wasn't even, this was like about a year after they'd finished, they'd taken the food out. They hadn't even really walled it off or anything. It's just kind of sitting there empty, all trashy looking and stuff. And makes you wonder, what are they thinking? What is their future? I mean, if I was a supplier and I was on a bridge loan because I'm coming out of chapter bankruptcy reorganization myself, my company's coming out of bankruptcy reorganization, I looked around at Kmart, I'd think, I'm not sure these people are going to be around and if they go under, we're like an unsecured creditor, and everybody else, all the big hedge funds and stuff that have all the big banks and everything that have secured loans secured by their real estate collateral and stuff like that are going to get paid off, and we're not going to get paid. I can understand what CIT was thinking when they cut them off, although I think still, honestly, that seemed like a little bit premature. They're not in as bad a shape as that. The Sears has been deteriorating for many years. They have kind of lost their edge in a lot of things. And part of what they've done is that when Lampere came in, he made a decision. He said, we've got these really great assets. Kenmore brands, Craftsman tools, Die Hard batteries, famous brand names that have a considerable amount of brand equity. Even though Sears may not actually have ever made any of those things, there certainly is no Kenmore factory. Whirlpool, Maytag, and now I think some of the Korean manufacturers are making stuff that have the Kenmore name. But still, people know the brand name. The customers know the brand names. Die Hard batteries, in particular, is very well known. So he started allowing allowing other stores outside the Sears Kmart family to sell those things. And of course, they made a lot of money off of some of those agreements, and that's generated a lot of revenue for them, and generated a lot of revenue. So they lost some of their exclusive things that they used to have that people used to go to it for. I know people that will not put anything but a Die Hard in their car. They've had Die Hard batteries, and when you get stuck beside the road, in 99% of the time, it's something related to the battery. Something having to do with the battery is the reason your car won't start 99% of the time. And so people want to have a good battery in their car. And, the Die Hard is probably the most famous brand name in that field. And so the fact that they're able to sell it to other places and make money off that generates money, but it also means that Sears has a little bit less. Sears has also tried to, different times they've tried to go more, they try to be more upscale in terms of their clothes, and people have never really accepted that. I think Kmart tried to do some of the same things even before Lampere took them over. And even before he started things, they were trying to get with Martha Stewart, and they were trying to go a little bit upscale, have some brand names and stuff in their clothing section. And people have, we do buy clothes at Walmart and Kmart. The American consumer does buy clothes there, but they don't. They buy simple things, T-shirts and shorts and exercise things and stuff like that. But they don't buy their nicer clothes. Even Walmart has never been able to convince the American consumer, by and large, to buy their nicer clothes there. Your Macy's and your Saks and your other types of operations, some of your the limited brands and the have done much better in that regard, in terms of they have maintained their edge in terms of selling clothes. I'm not sure what what Sears is going to do. Their auto chains are very profitable. You may see them spin that off because the auto chain is not really that closely connected to everything. So their auto servicing has been very profitable for them, and they've done really well with that over the years. And you may see them kind of sell that off and take the money, return that money to the people that own the company. The other thing for Sears, is a little bit difficult to see what they can do. I mean, if you look at what's going on, you have Target that's been very successful in targeting your 40-year-old female. You're married with kids, somewhere in the nesting stage type of female, selling her. So I don't know if Sears can touch them in terms of clothing and other types of things that she needs. I mean, baby stuff and other things, exercise and exercise stuff and things like that. Target's been very, very good. I've talked about in our retailing class about how successful they've been. They have a inventory turnover rate of 8%, and I believe the last time they have a gross profit margin of 40%. That's an incredible gross profit margin considering what they sell. The Kmart Sears operation, both of them are struggling. I'm not sure what Sears can do. The other thing that's hurt Sears was that Sears used to be the place that people went for the things that Home Depot and Lowe's sell. Do-it-yourself stuff, but also equipment and tools that people use around the house. Lawnmowers and hedge trimmers and tillers and all of those types of things used to be, Sears was the place to go for that. And there are, other companies that are coming in and competing. Sears still does probably pretty good. One of the areas they're still holding their own is in the appliance area, although there have been some new competitors come in there. There are other competitors, companies like Circuit City that used to try to compete with them, and they went out of business. They were not able to successfully compete with them, and they went out of business. So they're still kind of holding their own in major appliances, although they have to fight Home Depot and Lowe's in that area as well. And so it's not really clear where their edge is, what it is that they're going to sell to people. Electronics used to be a big place for electronics, and Best Buy is killing them in electronics. So they have almost anywhere you look at the Sears operation. You look at apparel, home furnishings, they're getting beat by Bed Bath & Beyond and home furnishing. They get beat by Macy's, Saks, Limited, and that Old Navy, the Old Navy group. They're getting killed by them in that area. In the tools and appliances, I mean, not so much appliances, but the tools and a lot of the things that they garden equipment and things that they used to sell, the kind of man section of the store, they're being pushed out by Home Depot and Lowe's. More successful operations in that area. So almost anywhere you look, they're having trouble competing. And I'm not really favorable. And this has been going on for a long time. And this is an iconic American brand that has, 10 years ago, it was less than it was 20 years ago. And 20 years ago, it was much less than it was 40 years ago. And so you just can't continue like that. And whether they're in a death spiral, it's debatable. When you have suppliers pulling financing on you. So I'm not really sure that there's anything necessarily that a Sears can do. Kmart is kind of a different story because Walmart has driven out so many of the other competitors. Kmart has a lot of leases that are very low cost. They have, they're in premium parts of town they're in good locations. If they could turn around the management of the system, the deterioration of Kmart is much different than the deterioration of Sears, in that the deterioration of Kmart is like willful negligence. Willful negligence, not just on the part of the hedge fund manager Edward Lampere, because he took it over when it was way, way down, and he bought it primarily not for its continuing operation, but the fact that it was worth so much more than he paid for it in terms of the value of the land and the leases and the other types of assets that they had. It was worth so much more, including some of the brand equity for brand names like Die Hard and stuff like that. But even before that, they refused to invest in their inventorying system. Walmart has built this incredible distribution system starting over in China. Right now in China, evidently things are going to be moving to Cambodia and Bangladesh fairly soon. A lot of as the wages go up in China and the renminbi appreciates, you'll see maybe they'll have to build somewhere else. But this incredible buying operation, distribution operation in China, and the stuff comes into the United States and they distribute it, and their buyers are sitting there looking at up to the minute data, SKU by SKU by SKU. And the Kmart buyers, prior to their original bankruptcy, were flying blind. I mean, they didn't even really know what was in the stores. They had a huge amount of shrinkage due to mishandling. At the time that they went bankrupt, their shrinkage was like 15%, some incredible figure for shrinkage for them, including spoilage and other things. And a lot of that was just mishandling of goods. I mean, they just mishandled stuff, and the buyers didn't know where things were. They didn't know what was in the store. They weren't looking at updated data, and so they did not invest in the things that they needed to invest to compete. I think really you have to make a decision. To me, it's an iconic brand. You've got great property and leases. Why not try to take a shot and improve the management? Start with checking people out more quickly. And then you might build up the critical mass. The real reason that the store here in Johnson City cut the food, very simple. They didn't have enough business to justify the produce and the meat and all that. All that stuff spoils. The bread spoils. And when you have fewer and fewer and fewer customers, and I can remember going into the produce section and saying maybe I should buy it, but there's like nobody in the store, and you got a full produce section. How old is this stuff? I mean, if nobody ever buys anything, it's got to just sit there and sit there and sit there and sit there. And even bread and meat and things like that. And I think they reached a point where they're saying, look, we're losing so much money to shrinkage that we can't afford to. We're actually losing money by trying to sell groceries because everything's rotting. And we're throwing everything out the back door because we don't have any customers to buy anything. So you need a critical mass in order to keep a business operating effectively. When you've got 18, 19,000 square meter store, you need a certain number of customers just to get the dust off the floor. And I think if I was given a recommendation to Kmart, I'd say let's work on getting the dust off the floor, and let's work on getting people checked out. And let's look at our other areas of dysfunction. The buying. Let's go through the store and look and do some really serious statistical analysis of inventory, the average age of inventory, different types of inventory in different departments. And then maybe, they might get some of those saltwater fishing lures and ship them out to Florida or to, Myrtle Beach or someplace where people use them. And so they might fix some of those problems and get things going. I think that there's a potential for them to do it. I'm not sure that there's the will to do it. Really, when you have the idea, you go to somebody who's a hedge fund operator and say, we need to improve service quality. The thing that we really need to do, especially at Kmart, is improve service quality. Well, let's try that first. Why don't we try that? I mean, Home Depot and Lowe's battled, and Home Depot spent a lot of their managerial resources, a lot of the rules that were brought down from the top to the bottom, dealt with the ratio, the labor ratio, labor expense ratio, the expense, the ratio between the amount of revenue coming in and the labor cost. And if you emphasize to managers minimizing the labor cost, what is the best way to do that? It's to have poor customer service, cutting out, not having anybody in a department, and if a department having periods when there's nobody in a department, or having one person in a department, even on a busy Saturday, that will sure cut your labor cost. But it also cuts your top line. And I think when you're paying somebody $8.50 an hour, and they check, like a cashier, they get paid whatever the minimum wage is plus 25 cents or 50 cents, depending on the prevailing wage in a particular area. And a good cashier might, think about how much they check out in an hour. They might check out $2,000 or $3,000 in an hour, and they're getting paid $7 or $8 for that. And even if you add in payroll cost and the payroll tax and all the other stuff, less than $10 for somebody to check out, several $1,000s worth of merchandise over the case of an hour if the customers are there. So it doesn't make sense to me. I don't see how. To me, it's the old idea of being penny wise and pound foolish, penny wise, dollar foolish, penny wise, euro foolish, where you're trying to save a few pennies by cutting out on cashiers, and what you end up doing is chasing all your customers over to Walmart. Okay, and that's it for Shemwell on Business. If you visit Kmart or Sears and have an opinion or want to tell a story about what you like or don't like about it, what you think they need to do to improve, what you think they could do to save themselves, or whether they can't be saved because they've already irritated you so much that you can't, that they can't save themselves. Nothing that they can do will ever get anybody back in the stores. So let us know what you think. Also, let us know whether it's okay. If you'll put a line in there that says it's okay to talk about this comment and use my name, I'll definitely I'll use your name only if you give me permission to talk about what you said in your email. Have a nice day.